Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Now I'm going to start chapter number 2 for Accounting CA Foundation. The first chapter I have completed 7 units on different theoretical aspects of accounting, theoretical framework of accounting. Now the second chapter deals with accounting process. Now again a number of units we have to cover up in this chapter number 2. This is the first video on second chapter. In this video, I'm going to explain you about the double entry system of bookkeeping, accounting cycle, then who are the users of accounting, then basic accounting terms, and lastly basis of accounting. These are the fundamental things which every student must know before going to solve the problems. And in examination, normally these terms will be asked. So all the foundation student, whether CA foundation or CMA or CS foundation, must know these basic things about accounting. So before starting the explanation of these topics, take the screenshot of the points, then I'll explain every point in detail. Now, the first term is double entry system. Double entry system is a system in which both the aspects of every transaction will be recorded. That is the reason why one account is debited, another account is credited. We can see every transaction, something we give and something we receive. The receiving aspect and the giving aspect. For example, when goods are sold, the goods are going out and cash is coming in. Similarly, when we pay the salary, the business is paying the salary in cash, cash is going out, but business is getting the services of the employees. So we can say every transaction has two aspects, giving aspect and taking aspect. Both the aspects are recorded in the books of account, that is called double entry system. That is the reason why one account is debited, the other account is credited. And this is a systematic method of recording the transactions. Now, what are the advantages of double entry system? The first advantage is the accuracy of accounting work can be established. Whether the accounts are accurate or not, that we can clearly find out by applying this double entry system. Because after preparing all the accounts, we can make the trial balance. The trial balance shows the arithmetical accuracy of the books of accounts. If the trial balance tally, that means prima facie we can say the accounts are correct. There are no errors. Secondly, the profit or loss during a period can be ascertained. Every businessman wants to find out that during the accounting year whether the business has earned profit or incurred loss. That we can easily find out if we follow double entry system. Thirdly, the financial position of the entity can be ascertained at the end of the period by preparing financial statements. So at the end of the year, every business wants to find out what is the value of the business, how much are the assets and how much are the liabilities, how much the business owns and how much the business owes. To find out that, balance sheet is prepared to find out the financial position. And balance sheet we can make only when we follow double entry system of bookkeeping. That is the advantage. Next one, the system permits account to be kept in as much detail as possible and therefore provides significant information for the purpose of control and reporting. So every management has to control the business, has to report what is happening in the business. And the management can be able to control the business, can report the activities only when double entry system of bookkeeping is applied. Management has to take the decisions, and decisions will be taken by using the information in accounting. And if double entry system is followed, then definitely it will be very much helpful to the management to take the decisions. Results of one year may be compared with those of the previous year, and reason for the change may be ascertained. Comparison is must. Every business wants to compare its own performance from previous years to this year, or one business performance will be compared with another business. If the comparison is possible, Only when we maintain double entry system of bookkeeping, easily comparison can be made. If there is a difference, then we can find out the reason for those differences. So this is about double entry system and advantages of double entry system. The next topic is regarding accounting cycle. Actually, cycle means an activity which repeats in the same manner. The steps are repeated sequentially. So accounting is also a process which has certain steps, and these steps will continuously rotate. That's why it is called accounting cycle. So accounting cycle is a complete sequence, beginning with recording of transactions and ending with the preparation of final accounts. The first step in accounting is the recording of transaction. And the last stage of accounting is preparing the final accounts or preparing the financial statements. So all the activities involved that goes on repeated. That means first recording, then classification, then analyzing, then interpreting, then communicating, then preparing the financial statements, then again recording, then classifying. So this complete cycle will go on rotate. That is called accounting cycle. Now what are the sequential steps involved in accounting cycle? The first step is journalizing. Journalizing is the first stage of accounting where the transactions are recorded in the books of original entry with the help of documents. The documents are invoices, the documents are purchase orders, debit note, credit note, statement of account, bank statement. All these are the source document. By using this source document, we record in books of original entry. That is called journalizing. Passing the journal entries in the books of original entry. That is called journalizing. First step. Second step, posting. After journalizing the entries in the journal or subsidiary books, the second stage is posting the entries from journal to ledger. So periodically all the transactions will be classified into accounts. And all the transactions of like transactions are put in accounts like sales account, purchase account, salary account, rent account, telephone bill account. All these are the different accounts open in ledger. So periodically we transfer the entries from journal to ledger. It is called posting. Then balancing. This journalizing and posting will be continued throughout the year. At the end of the year, we find out the balances in accounts. Some accounts, debit and credit balance will be equal. That means account is closed. But many accounts, we will have the balance. The balance means the difference between the debit total and credit total of an account. So some accounts may show debit balance, some accounts may show credit balance. All the debit balances will be taken in one column and all the credit balances will be taken in another column. That is called trial balance. So if the trial balance agrees, that means total of debit and total of credit are same, then we can say there are no errors in the books of accounts. So this trial balance is prepared before preparing the financial statements. Next comes income statement. We can call it as income statement or we can call it as profit and loss or statement of profit or loss. Different names are given. But income statement will be prepared to find out the performance result of the business. By conducting so many transactions during the year, whether business has earned profit or incurred loss during the particular year, that is income statement. Last is position statement. We can call it as position statement or we can call it as balance sheet. It's a statement which lists down all the assets and liabilities. If we have not committed any mistake, the total of assets and total liabilities will be equal. So these are the steps involved in accounting cycle. First journalizing, then posting it into ledger account, then balancing, then making the trial balance, making the income statement and making the balance sheet. That's all. Now, users of accounting information and their needs. See, accounting is the language of business. The business will communicate with outside world, with different people about the performance of the business, about the value of the business. The communication with outside world is with the help of accounting. So this accounting information is needed by so many stakeholders. They are called users for different purposes. So why this? Who are the persons who use the accounting information? Short-term creditors. The short-term creditors are the supplier of goods. So normally a business will purchase the goods from the supplier on credit. So before supplying the goods, the supplier will analyze the financial statement of the customer to find out whether they will be in a position to repay the amount on time or not. So to find out the short-term liquidity of the business, the short-term creditors are the users of the financial statements, financial information, to take the decision whether goods should be supplied or not. Long-term creditors. There are not only short-term creditors, but there are long-term creditors who supply the funds, not material, like bankers, financial institutions. They will give long-term loan to the business. So before extending the loan, the bankers will find out what is the financial position, solvency of the business, whether the business can be able to repay the loan amount along with interest or not in the long run, because loans will be given for 5 years, 8 years, 10 years, 15 years. So during a long period of time, whether the business can be able to survive or not. That is called long term. Next comes present investors. There are many investors. For example, a sole proprietor or partnership or a shareholder. Every year, they will find out whether we should keep our investment or we should sell away our investment or should we buy further investment. For example, you are a shareholder. Particular company, you are a shareholder. Now, every year you want to decide whether you should hold the shares or sell away the shares or buy further more shares. To take the decision regarding investment, the financial information is needed by present investors. Potential investors, they are not the investors, but they are intending investors. Mr. X not yet invested his funds, but before making the investment, he wants to evaluate the performance of the business. If the business appears to be good, then the potential investor will take a decision to make the investment. So again, financial information is required even for potential investors to take the decision whether investment should be made or not. Management. The biggest user of financial information is the management. Management is the driver of the business. The business has to take, the management has to take so many decisions. Planning, controlling, coordinating, all these are the functions of management. For performing those functions, the management requires information. The financial accounting will provide the necessary information to the management so that management can be able to plan, management can be able to control. Employees. Before joining or at the time of doing the job, the employees will analyze the financial statement to see whether the financially the business is strong or not, because they will get the salary, incentives, bonus, all the remuneration they are getting depending on the performance of the business. If the business is not performing good, if the business is going into losses, there is no guarantee that the employees may get remuneration. So employees are also interested in the financial information. Next comes tax authority. In almost every country, there is a tax department which collect the tax from the businesses. So the business has to pay tax, income tax. Example, one tax I am taking, income tax. Income tax is a tax on income of the business. So tax authorities will calculate the tax depending on the income. And income we can know only by applying the accounting. So tax authorities are interested in the business to apply the tax. Next comes customers. Nowadays many customers are there who wants that continuously we should get the goods from the business. If there is no continuity of receiving the goods, the business may collapse. Our business will be, at stake. Example, XYZ company is the supplier of goods to ABC company. So ABC company is the customer of XYZ company. Now ABC company depends on XYZ company. If something goes wrong in XYZ company, then ABC company will also suffer, because they are the customers. They want the continuity of supply of goods from XYZ company. In this way, the customers are also interested in the financial information. Next comes government and their agencies. Every country, the government has so many plans of economic development and number of restrictions which are applied, so that there should not be concentration of economic power. They should encourage the competition. There should be some prices control. All these are the decisions to be taken by the government and their agencies. So these government and agencies are also interested in the financial information of the business. Last comes public. The business is running in a society. The business is consuming so many resources from the society. So it is accountable to the public. The public wants to know what are the resources the companies are using, the business are using. That means what benefit the company is giving to the public. So they can get the information only from accounting. So these are the users of accounting information and their need. Now I'm going to come to the next topic called basic accounting terms. Before going to study about the recording, classifying, preparing trial balance, first of all, a student of CA or any accounting profession, they must know the technical meaning of the terms which are used in accounting. So I'm going to explain each and every term. First term is entity. An entity is an economic unit which is engaged in doing economic activities. Example, a sole proprietor is an entity, and a partnership business is an entity, a company is an entity. It's an economic unit which is performing economic activities in order to attain an objective. The objective may be to earn the profit. So for every entity, accounts are required. Next comes an event. The consequence of a transaction is called an event. Example, the usage of raw material is an event. Similarly, the closing inventory, the stock remaining after selling the goods, some stock will remain. That is called the event. Next comes business transaction. Transaction means exchange. Something we are giving, something we are getting. Every economic entity will conduct so many transactions like purchasing the goods, selling the goods, paying the salary, paying the rent, receiving the cash, paying the cash. All these are called transaction. Simply exchange of money or money's worth is called a transaction. When the transaction is conducted by a business, it is called business transaction. Now account. Account is a place where all the like transactions are recorded in a summary form. Example, the salaries are paid throughout the year. Every month salaries are paid. Now we want to find out what is the total salary paid during the year. So we make an account, salary account, which gives summary of all salary transaction at one place. So account is a place where all the like transaction during a period are recorded. Next comes assets. Assets are the properties or legal rights which give the business economic benefit in future. Every business will make use of assets in order to get economic benefit in future. Example are tangible asset, intangible asset, etc. The assets are nothing but the property like plant and machinery, furniture, fixture, land and building, vehicles. All these are called assets. Now assets are classified into current assets and non-current assets. Current assets are those assets which can be converted into cash within a period of 1 year. Like stock, inventory. Suppose inventory is there which can be converted into cash within 1 year. So inventory is called current asset. Account receivable, amount due from customers. That is also asset. That's a legal right to get the money from other person. That is also an asset. But we can get the cash within 1 year. That is called current asset. Non-current asset, an asset which will be held by the business for a long period of time. Example, machinery, furniture, then vehicles, and then building. All these are the non-current assets which are used by the business for a long period of time. Liabilities, the financial obligation of the business to outsiders. That means the amount due by the business to outsiders other than the owners. Like bank loan taken, that is a liability. Similarly, amount due to creditor is a liability. Amount due for taxes is a liability. Amount due to expenses, that's a liability. So any amount owing by the business to outsider is called a liability. Liability is again divided into current liability, non-current liability. Any liability which is due to be paid within 1 year is called a current liability. The liability which is due more than 1 year, that means we have to pay more after 1 year, it is called non-current liability. Next comes capital. The amount invested by the owner in the business is called capital. Example, in case of sole proprietorship, the sole trader, the sole proprietor invests the money in the business, that is called capital. In partnership, every partner will contribute amount to the business, that is called capital. In a company, the shareholders will subscribe the shares and pay the amount to the company. The shareholders are the owners. They have invested the money with the company. The company will call it as capital. Next comes drawings. Amount withdrawn by the owner for personal use, whether amount is withdrawn in cash or goods. Sole trader. In case of sole trader, the owner will withdraw some cash for personal purpose or withdraw some goods for personal purpose, it is called drawing. Similarly, in partnership, when the partner withdraw the cash or withdraw some goods from the business for personal use, it is called drawing. But drawings are not there in limited companies. Next comes goods. Goods are the articles or things in which the business deals. Example, in a cloth business, the owner, the business will purchase the cloth for the purpose of selling the cloth. The cloth is called goods. In furniture business, they are purchasing the furniture for the purpose of sale. The furniture are goods. So any article or thing in which the business deals, that is called goods. Purchases. The articles or things which are purchased for the purpose of sale are called purchases. Sales. The goods when actually sold, the goods which are purchased are actually sold to customers, that is called sales. Stock. The quantity of goods which are purchased but not yet sold, still lying unsold, that is called stock. Then comes trade receivable. Amount due from customers for credit sales. Every business will deal in cash sale and credit sale. In credit sale, goods are sold now, but the amount is not received. The customer will make the payment in future. So amount due from credit customer is called trade receivable. Trade payable. The amount due to supplier. Just like how we are selling the goods on credit, we are purchasing the goods on credit. So from the supplier, we purchase the goods and we have not paid the amount. We will make the payment after 1 or 2 months in future. It is called trade payable. So trade receivable is an asset. Trade payable is a liability. Expenses. The amount spent for generating the income are called expenses. Without incurring the expenses, the revenue will not be generated. Example, salary paid, rent paid, telephone bill, electricity bill, all these are the expenses. Incomes. The amount, the economic benefit received by the business is called income. So income will be derived from sale of goods. Income will be derived by getting the dividend, getting the interest, getting the commission. All these are the incomes. Net profit. The excess of income over expenses. The excess of income over expenses is called net profit. Now discount. Any incentive given by the business to promote the sales. To increase the sales, some incentives are given to the customers. That is called discount. Discount are again classified into trade discount and cash discount. The trade discount is the discount given by a business to the buyer in reduction of the price, market price, marked price. Every product will have a marked price. If that marked price is reduced at the time of selling the goods. Normally, trade discount will be allowed by wholesaler to retailer by reduction in the marked price. So, trade discount will be given to all the customers depending on the quantity purchased. When the customer purchases in large quantity, bulk quantity, trade discount will be given. Next comes cash discount. Cash discount means a discount which is given by a business to credit customer for early payment. If we have given the time period to the customer 3 months, after 3 months he will make the payment. But if he comes and make the payment within 1 month or 2 months, we have to give some discount to encourage the customers to pay the amount on time and before time. That is called cash discount. Now next one is vouchers. Vouchers are the documentary proof on the basis of which transactions are recorded in the books of account. So without having any proof, no transaction will be recorded. The transaction should be evidenced by a proof. So that proof is called voucher. Example, on the basis of invoice, on the basis of bank statement, on the basis of credit note, all the transactions are entered. So vouchers are the documents on the basis of which transactions are recorded. Revenue. Revenue means inflow of cash on account of different activities like the inflow of cash on the sale of goods or providing the services, or inflow of cash due to dividend received, interest received, commission received. All the cash inflow in the business is called revenue, or economic benefit received is called revenue. Now bad debts, irrecoverable debts, the debts which cannot be recovered. In every business, the business will sell the goods on cash as well as on credit. Whenever there is a credit sale, the business is not sure that 100% we can be able to recover the amount from the customers. There may be some customers who may not pay the amount at all. The person dies or the person is absconding. The business will wait for some time. The business will put a court case against that person, but still unable to recover the amount. So if any amount is not recovered from the customer, it is called bad debt. It's a loss to the business. Next comes provision for bad debts. Provision for bad debts is the expected bad debts. According to prudence concept, all expected losses should also be recorded. Not only actual loss, but also expected loss should also be recorded. The bad debts is an actual loss. Provision for doubtful debts is an expected loss. So normally a business will calculate at the end of the year, they'll make a policy that 5% of trade receivable will be treated as provision for bad debts. For example, if the amount due from customers are 1 lakh, the 5% of 1 lakh is 5,000. So business expect that out of 1 lakh, 5,000 rupees we are not going to recover. We may not be able to recover. So net realizable value is 95,000. So that expected loss is called provision for bad debts. Income statement or profit and loss account. Every year at the end of the year, the performance result will be ascertained by preparing income statement or profit and loss account. So this statement will disclose whether the business has earned profit or incurred loss during a period of time. Statement of financial position or balance sheet. Along with income statement, one more statement is prepared called statement of financial position or statement or a balance sheet. In this statement, it listed down what are the assets and what are the liability, how much the business owns and how much the business owes. It gives the value of the business, worth of the business. So these two statements are called financial statements, which are prepared by every business at the end of the year. Next comes cash. Cash means cash in hand or cash at bank or demand deposits with the bank. So the hard cash which is held by the business or having in the bank or demand deposits in the bank, that is called cash. Cash equivalent are the short-term investments or marketable investment which can easily be converted into cash. without any significant risk. So all short-term investment or marketable investment which can easily be converted into cash without significant risk is called cash equivalent. Then depreciation, decrease in the value of the non-current asset, decrease in the value of fixed asset due to wear and tear, due to obsolescence, lapse of time, depletion, etc. Whenever fixed assets are used, its value will get decreased. So that decrease in the value of the fixed asset is called depreciation. Shares. The capital of a joint stock company is divided into number of parts. Each such part is called a share. Example, a company is having the total share capital of 10 lakhs. Total share capital of 10 lakhs. Now the company has divided 10 lakh rupees into 1 lakh parts. Each part is of 10 rupees. So 1 lakh into 10, you will get 10 lakh. So total capital is divided into 1 lakh parts. Each part is called a share. Then debentures. The company can take the loan from the public by issuing debentures. Debentures are the debt instruments which are issued by a company to the public. The public will purchase debentures, they will get the interest. Just like depositing the money in the bank, they will get the interest. So instead of depositing the money in the bank, the public can give the fund to the companies. So that is called debentures. Bonus shares. The shares which are freely issued by a company to the existing shareholders out of reserves. Every year, out of the profit, some profit is declared as dividend and some profits are kept in reserves. Over a period of time, the reserves will get accumulated. Reserves will get large. So out of that reserves, free shares are issued by the company to the existing shareholders in proportion to the shares held. That is called bonus shares. Right shares. Right shares are issued by a company whenever a company wants to issue new shares. The shares must first be offered to the existing shareholders. If the existing shareholders deny to purchase those shares, then only the company can go to the public. So existing shareholders will have a right to get to the new issue of shares to them first. That is called right shares. Goodwill. Goodwill is the reputation of the business. From business point of view, goodwill is an asset. It's an intangible asset. We cannot see, but there is goodwill. How? Over a period of time, if the business is earning a greater return than the normal business, then the business is earning greater profits on account of goodwill or good name or reputation. So goodwill is an intangible asset which gives greater or higher returns to the business. Next comes cost of goods sold. The cost of goods sold is the expenditure incurred on those goods which are sold away. On those goods which are sold. Next comes intangible asset. The asset which we cannot see, which we cannot touch, but it exists in the eyes of law, it is there. But the thing is we cannot see. Example, goodwill is an intangible asset. We cannot see the goodwill, we cannot touch, but we can feel. If a business is earning huge profit, then definitely there is something, some asset is there which is giving more profit. That is goodwill, intangible asset. Next comes net profit. Net profit is the difference between revenue and expenses, income and expenses. So all the incomes minus all expenses, we will get net profit. Next comes preference shares. There are two types of shares in India. We have preference shares, equity shares. Preference shares are those shares on which the rate of dividend is fixed. And preference shareholders will get the dividend before any dividend is paid to ordinary shareholders. Preference shareholders will get the right to get back their capital on the liquidation of the company before any capital is returned to equity shareholders. So before returning the capital to equity shareholders, the company has first of all paid to preference shareholders. They are having preferential rights. Next, equity shares. The second type of shares, that means those shares which are not preference shares, are called equity shares. The equity shareholders will get the dividend after paying the dividend to preference shareholders. The rate of dividend on equity is not fixed. It will fluctuate. It depends on the profit of the company, and also it depends on the discretion or proposal of the directors. Next comes carrying value. The cost of the asset minus accumulated depreciation. Example, we have purchased a machine 5 years back for rupees 1 lakh. And during the 5-year period, we have provided 30,000 rupees as depreciation. So 1 lakh rupees is the cost, and total depreciation provided during 5 years is 30,000. So 1 lakh minus 30,000, 70,000 is called carrying value. Next comes amortization. Any intangible asset will be written off over a period of time. For tangible asset, the written off amount is called depreciation. For intangible asset, the written off amount is called amortization. Accumulated depreciation. The total depreciation up to date is called accumulated depreciation. Just now I've given the example. If a machine is purchased 5 years back, and during the 5 years, we have provided 30,000 depreciation. So the 30,000 depreciation provided up to date, from beginning, from the date of purchase till now, it is called accumulated depreciation. That's all. So totally 40 terms I have explained, which are frequently used in accounting. Now, basis of accounting. There are 3 methods of maintaining the accounts: accrual system, cash system, and hybrid system. Accrual system is the most famous system of accounting, where all expenditure of the current year, whether paid or not, all incomes of the current year, whether received or not, will be considered. Example, salary of 1 year is 1,20,000. The salary of the employee for 1 year is 1,20,000. But out of 1,20,000, only 1 lakh is paid. 20,000 rupees salary due, outstanding. But while preparing income statement, we take into account the total salary which is paid and also which is outstanding. So 1 lakh rupees salary paid, 20,000 outstanding. Total salary 1,20,000. Why we are taking 1,20,000? Because we are following accrual system. Accrual system says all expenses, whether paid or not, should be considered. Similarly, all incomes, whether received or not, should be considered. Example, in 1 year, we have earned commission of 1 lakh rupees. But out of 1 lakh rupees commission, 80,000 commission we have received. But 20,000 we have earned but not received. So accrual system says take complete 1 lakh. Whether we have received or not received, completely we have to take 1 lakh according to accrual system. But one more system is the cash system. In cash system of accounting, only cash received and cash paid should be taken. Outstanding, advance received, advance paid should not be considered. Only cash should be recognized. How much cash is received and how much cash is paid. Very few business houses, they may adopt this cash system. But majority of organizations, they will follow accrual system. That is a true system of accounting. Next one is hybrid system. Hybrid system means combined. Accrual plus cash is equal to hybrid, in which some transactions are recognized on accrual basis and some transactions are recognized on cash basis. In this way, hybrid system of accounting will arise. But very few business organizations, they may go for hybrid system. So this is the end of this video. In this video, I've explained you about double entry system, about the accounting cycle. I have explained about the users of accounting, the different accounting terms, basic accounting terms I have explained, and lastly, systems of accounting. These are the basic videos which you should not skip if you want the complete knowledge, because you are pursuing professional course. So don't restrict your preparation only in solving the problem, but also in listening the lectures on theory. This is very important. So inshallah, we'll continue the next topic in the next video. If you are satisfied, give a like to the video, share my channel, give your comments, subscribe if you have not yet subscribed, and buy the super thanks which is given below my video. Inshallah, we'll continue the next topic in the next video.